Welcome to Markets Now. I'm Michelle Rook with Brad Kooima with Kooima Varilek. Grain seeing a little pressure this morning with the livestock futures mostly higher. And Brad, good to have you with us this morning. Cattle market yesterday had a correction. We kind of ran up into some chart resistance. What is it going to take to get through those areas, or do you think we eventually will?
It's a great question, Michelle. Thanks again for having me on. I enjoy this a lot. We have to take out, I think, what does it take to get us through there? In the past, here the last while, the market has been much like our neighbors in Missouri, the show me state. Show me that the cash indeed is going to take out these levels, and then maybe the futures will follow along. It seems to have been more the pattern of late. So I think you're going to need some, testing of improving in the cash market probably. Now, last week was not a bad week cash-wise.
No.
It was higher, but still not to the levels that the futures are at, of course, at least not in the Aprils. In fact, the whole basis thing is curious, interesting, weird, all of those things to me. Typically this time of year, June cattle is a big discount to cash. So when you hear about these guys that are doing these basis deals, we're trading, selling cattle in May for so many dollars over the June, usually you shrug and say, yeah, well, that's no big deal. Well, this year, those basis deals actually have cash on May 1 higher than today's cash is. So I'm kind of interesting to see how that's going to play out. Unfortunately, there's some, I think, very yellow blinking caution signs here in the market down the road a little bit. Maybe not today's market, but there are some things that do have me a bit concerned for maybe what this thing looks like in a month or 6 weeks.
Well, let's talk about one of those, and that is that we're just not killing enough. We were under 600,000 head for the weekly kill last week, only 100,000 yesterday.
3 plants dark on Friday. We're going through this cycle of cooler cleanouts, which always happens. It happens twice a year. It has to be done by law. But there are some plants that are just plain closed on Friday too. Last week, Friday, and the kill yesterday was no runaway either. So, year-to-date slaughter is now 5.2% less than a year ago. Yeah. And maybe that's all there is. But if you believe the USDA cattle on feed reports of October and November, that's when we thought we were going to kill 2% more. So there's a great disparity. Now, the USDA does miss it from time to time, right? And so we'll find out a little more as we move along here. But I don't know. Watch the weights. I would really strongly encourage everybody to do their best to stay current here at this point. Weights are not exactly trending sharply lower like the last 2 weeks like they usually do. The weights crept back above a year ago last Thursday. So, the feeder cattle are high priced, corn's cheap. The cattle lose money here. Break evens are higher than 184, and the futures are now a premium. So all reasons why you might expect us to hold cattle a little bit. But during that holding period, it's bullish, right? I think that's part of the reason we got the cash better last week. So yeah, it's kind of if you're a fundamentalist, it's kind of an interesting time.
Are the weights creeping up just a little bit because it's just been too warm? I mean, we haven't had a lot of cold weather here for sure.
Once we got past the January mess, yes, yeah. Cattle are laying dry. This is typically the time of year when you really struggle with mud, and so the performance here the last while has been very, very good. And so, yeah, let's keep an eye on that. I hope I'm, hope I'm just crying wolf, but I would be a little worried that we're backing some cattle into that April-May slot.
Do you have a good sense yet from some of your cattle sources what kind of death loss we did have in Texas with the wildfires last week? And is that having any market, or will it have any market impact?
It's a good question, Michelle, and I get asked it a lot, I guess, because it's in the news. And, connecting a little bit with some of those guys that I do know down there. As you all know, Texas is a huge state. The area of the fires certainly are impactful of some of the cattle belt, but it isn't exactly the core of the cattle belt either. Now, I'm very sympathetic. If it's your ranch, obviously it's a nightmare, a disaster. But to summarize, I would say that most of us in the trade do not think that the number of cattle that have died is enough to be a long-term market factor. The feed loss is a big problem for those guys down there too, of course. But I guess hopefully they can get it contained. And I'd say that the general train of thought here is that it's probably not a big enough number to be an overall market factor.
Okay. Hogs, as we speak, we're seeing bear spreading just like we closed yesterday. So, the summer months have been gaining. Still look maybe a little too high back there, you think? And did the front months, did they just get too premium to where the index is, you think?
It looks to me like the funds really, crawled all over each other. It reminded me of the old days chasing hogs through a narrow doorway, right? I mean, that's exactly how the futures trade too, where they, punish the market on the downside, scrambling all, trying to cover each other, get out of the way of each other on the way back up. I thought we got a little bit too high, but we were finally the benefactor of, a better pork trade, better demand.
Right. Cash and cutouts were going up.
Very real, and at the expense of the beef to a degree. Now that has shifted again. By the way, the beef is the highest it's ever been 1st of March, other than the COVID year. So you've kind of moved that back back and forth a little bit here now. So I would don't like what the chart looks like today after we ripped out through that week and a half of sideways. Of course, the fund roll is part of the story here, especially I think the last 2 days been very obvious in the hogs, the pre-roll, the Rogers roll, those different rolls that happened before the Goldman. But so, you can see the weakness in the front end of the cattle and in the April hogs today too, relative to the backs because of that.
Did you suggest some hedges be placed in those summer months when we got above 100 or not?
Yes, we did, with the idea that you still are dealing with a supply-driven market and a market that has to have perfect demand to be able to handle that kind of supply. So maybe we can pull that off, but the demand story is iffy in our opinion.
Gotcha. Corn and soybeans, well, the whole grain complex lower this morning. We ran up into chart resistance, and we did not have the best close in beans yesterday for sure.
For sure. Sympathetic, but hey, let's grab the calendar here. Okay, 1st of March. Between the 1st of March and the 1st of May, I would much rather think that we've got a chance at some seasonal rally, that the market will shift its focus maybe to wet, hot, cold, dry. I don't know, something. It seems like that always happens as you get closer to April. What the catalyst would be today to make it rally is hard for me to come up with. First step would be here to get the corn above the 20-day moving average. I mean, we failed like right on it yesterday.
Right.
The funds are still a big short, not the record short that they were. But I think that if we could get through the 20-day, which we could do that today if it would just get off its tail, that would trigger further short covering. And you can see if the funds decide they want in or out, it doesn't have to make sense with the fundamentals on a daily basis. So I was rooting for something like that, and I guess I still would be. Maybe the grain report. I don't know that there's anything in there to really hang your hat on. Maybe, we get some reconciliation with what the USDA thinks Brazil's bean crop is compared to what you hear out of there. But yeah, I wouldn't hold my breath for that either.
Yeah. And then every time we get a rally, you're going to get it capped by farmers selling, aren't you, Brad?
Oh, yeah. And that certainly was the case last week.
Yeah.
In fact, you could see it on the road. It was like harvest out here in Northwest Iowa with the way that the trucks were running again. I was hoping maybe we got those March 1 bills paid now, and maybe we could have a little respite in the farmer selling. But one gets the feeling that there's a lot of it around. So we'll see. It's going to it'd take a lot to make this market have a rally. You'd have to have, you got to be 2 or 3 months down the road, and you've got to have some weather issues. This thing isn't going to rally 50 cents on its own.
Yeah, we don't have much risk or weather premium in this market, though. The only thing I can think of, maybe you get to the end of the quarter, maybe you get funds to cover some shorts before the acreage report or the prospective plantings.
Exactly.
Maybe. All right. Thanks for joining us, Brad Kooima with Kooima Varilek. That's Markets Now.